Introducing a new era for discerning Australian investors. Brought to you by Ausbiz and backed by deep market insight, professional analysis and a proven track record. Our focus is simple: to connect you with exclusive and compelling investment opportunities. Discover what's next at ausbizcapital.com.au. This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Good morning. Welcome to the Global View on this Friday, the 6th of the 6th. I'm Nadine Blaney. Great to be here with you. So stocks here locally are expected to fall today as U.S. President Donald Trump threatened to pull government support for Elon Musk's companies as their war of words over the Big Beautiful Bill Act escalated. Tesla stock plunged 14% overnight. Shares in Trump Media and Technology Group also slumped. The Nasdaq Composite was the worst performing major index. The S&P 500 and the Dow were also lower. Consumer discretionary stocks led sector losses, ending down nearly 2.5%. The top three S&P 500 percentage gainers: Dollar Tree, Norwegian Cruise Line, and Cooper Companies. The biggest losers: Brown-Forman Corp, Tesla, and Plantier Technologies. Custom AI chipmaker Broadcom fell in extended trade after it forecast third quarter revenue of about $15.8 billion, but failed to impress investors with that. And discount retailer Five Below shares rose after it lifted its annual sales forecast as it posted solid first quarter results. Stocks initially were boosted by optimism over a trade deal between the United States and China. No deal has been done, but the U.S. President and Chinese leader Xi Jinping held a leader-to-leader call and invited each other to visit their respective countries. Trump says there will be further lower-level U.S.-China discussions, adding there should be no longer any questions respecting the complexity of rare earths products. Data showed that the number of Americans filing for new applications for unemployment benefits increased to a 7-month high last week. The non-farm payroll report is due tonight. Now, we heard from two Fed speakers. Fed Governor Adriana Kluger said she supports maintaining the FOMC's policy rate at its current setting if upside risks to inflation remain. Kansas City Fed President Jeff Schmidt says that tariffs are likely to push up prices, with the ultimate effect still an unknown. Markets are pricing no chance the Fed funds rate will be cut by 25 basis points at the next meeting on the 19th of June, but for more easing cuts or cuts this easing cycle. The ECB cut interest rates as expected. It's lowered borrowing costs 8 times or by 2 percentage points since last June. But Christine Lagarde, the president, hinted at a pause with inflation now just below 2%. The U.S. 10-year Treasury yield edged up to 4.39%. The U.S. dollar index round trip down and up for no net change on the day. And Bitcoin continued to come under pressure. Some expect that was because of retail investors covering losses when it came to Tesla. Oil was up on news of those trade talks that will continue between the U.S. and China. Brent crude oil rose 0.7% to $65 per barrel. Gold miners rose in the U.S. The price of gold, eyeing $4,000. Silver hit a 13-year high. The falling U.S. dollar helping to drive those expectations. And copper miners, including Rio, BHP, and Southern Copper, rose as the red metal hit a 2-month high on supply worries. So we'll be watching those shares with much interest here locally today. But let's get an overview on U.S. markets and also talk about some stocks for the U.S. summer. Dave Sekera from Morningstar joins me now. Dave, welcome. Look, the adults in the room, you would think, would be paying attention to China, U.S., Elon Musk and Donald Trump stealing the headlines. What are you expecting from here?
Well, we just published our June monthly outlook for the U.S., and the title of it is, Has the Storm Passed? And unfortunately, I just don't think it has. And for viewers that are interested, this article is available on morningstar.com.au. So last month, we noted in our monthly write-up that, the market was entering a period of calm. The market in the US had really gotten to be, just very sanguine about the heightened risks that we yet still have to face. So in my mind, this is not the passing of a single storm, but to me, it feels like we're kind of more in like the eye of the hurricane. And when I look at our market valuation versus the risks that we still have to get through over the next couple of quarters, yeah, I just don't think there's enough margin of safety here to be putting, new money into U.S. stocks at this point in time. In fact, if the U.S. market really only trading a percent or two below our fair value, I'd say that less than half the time has the market traded higher, than where it is now on a valuation basis. So to me, probably more risk to the downside than the upside. Just thinking through the risks that we have, as you mentioned, we still have all the tariffs, all the trade negotiations still yet to go on. Even before all the tariff headlines, our U.S. economics team expected the economy to grow at a slowing rate over the course of this year. I think FactSet just put out an article recently talking about, that they see analysts or the street reducing second quarter earnings, more quickly than they've seen, typically in the past. We've had bond market volatility. The Fed just certainly appears to be on pause for now. Geopolitical risks certainly aren't getting any better. And then lastly, we still have the risk of inflation coming back as those tariffs go into place.
Lots to take into consideration. So, lightning when it comes to U.S. equities. How is your positioning when it comes to, say, small to mid cap stocks?
Mhm. So when we take a look at our valuations, we do break it down by the Morningstar style box. So when we look at it by capitalization, small cap stocks look very attractive to us. We currently would overweight that part of the marketplace. They trade at a 20% discount, which is both, cheap on both a absolute as well as a relative value basis in our mind. So in order to pay for that overweight, of course, you'd have to have a small underweight in, large cap and mid caps, but I wouldn't of underweight those, too much. I just would, hesitate to go too far into small caps. I would just make sure that people realize this is not a trade. It may take small caps, a while for it to work. Typically, they do best in an environment when the Fed is, cutting the federal funds rate, after the economy has been in a recession and starts to, look like it's coming, back. And we're just not in that environment at this point in time. So I think it might be later this year that small caps really start to work. I just will caution that when small caps start to work, they work pretty fast. And so I think that's why you want to have a position, on the table now. Once you do get that rotation out of the large and the mid cap space, it doesn't take that much capital coming out of those two areas really to see small caps rally quite quickly.
Okay, now, so that's your view on small caps. What about the ultra large part of the market, those big US tech companies? Because, Dave, the spend on AI is not slowing down at all.
Yeah. So when I think about, the tech sector overall, where we see the best value for, investors today is really among more the traditional technology names. So the artificial intelligence names, they came into the year, they're generally, 1 and 2 star rating, meaning that we thought that they were, overvalued to significantly overvalued. That really started the bear market in the US when they were selling off, at the end of January into February, and then of course got hit, even harder in March and April. A lot of them have bounced back quite, a lot. So they're probably in like that 3 star range right now. So fairly valued, not necessarily attractive. But when I think about the technology space, and one of our main themes for this year is I think 2025 is going to be the year that the market really starts shifting its focus away from the AI hardware providers and towards those companies that can utilize AI in order to be able to generate top line growth, use AI in order to enhance their existing products and services, maybe develop new products and services based on AI, as well as use AI within their own companies in order to be able to increase efficiency and operating margins. So some of the companies that we'd identified that we think fall into that theme, with the big mega caps is going to be Microsoft. That trades at an 8% discount to our fair value of 505 a share. Amazon, 14% discount to our $240 fair value. It's a 4-star rated stock. And then lastly, Alphabet, that trades at a 29% discount to our $237 fair value. That's a 5-star rated stock. A couple others just to mention along that same theme are going to be Salesforce, trades at a 19% discount to our fair value. That's one that our technology team consistently highlights as being one of our better picks in the tech sector. And then we also think Adobe over time will actually do very well as it integrates artificial intelligence into its products. That one trades at a 30% discount. It's a 4-star rated stock.
Awesome. So I just checked the weather in Chicago. It's only 16 degrees, going down to 14 tonight. Of course, I'm talking Celsius, given where we are. Summer's not quite there yet, but knocking on the door. And you've given us 5 stocks for the U.S. summer. Where do we start?
Exactly. So as we transition to the summer, the first thing you need to do really is to start with a deep spring cleaning in your household. So we're recommending Clorox. Now, not only do they have, Clorox wipes, and other cleaning materials, but, they also sell Kingsford charcoal. So as you fire up your barbecue grill for the summer, Clorox will benefit from that. It's a 4-star rated stock at a 27% discount, 3.8% dividend yield. And of course, if you're going to host that backyard barbecue, you want the yard to look good. So we recommend it Scott's Miracle-Gro. That's a 4-star rated stock. Now it's only trading at a 25% discount. That stock was up, I think, 10 to 11% today. They were presenting at an investment conference. They actually increased recently their earnings guidance. So the market definitely was looking favorable upon that. Once you have that grill fired up, you need the Oscar Mayer hot dogs, slices of cheese for your hamburgers and the ketchup. And of course, what's summer without s'mores and a campfire? So you need some jet puffed marshmallows. So that leads me to Kraft Heinz, 5-star rated stock, trades at a 50% discount to our fair value, pays over a 6% dividend yield. And of course, you can't have s'mores without chocolate. So take a look at Hershey. It's a 5-star rated stock, 20% discount, 3.4% dividend yield. And then lastly, one of my favorite names right now is Constellation Brands. It's a 5-star rated stock at a 35% discount. For those of you that don't know the company, they import Corona and Modelo beer from Mexico into the United States. This is one where Warren Buffett just doubled his exposure in the first quarter. So I think I'm along pretty good company there. And to me, best part of buying the stock is you can support your own investment by enjoying a Corona by the pool this summer.
Cheers to that, Dave. Boy, I love the long, long summer evenings in that part of the world. I miss them a lot. All right. Nice to have you join us. Really appreciate your insights.
Thank you very much.
Take care. Dave Sekera joining us from Morningstar, and he was live in Chicago. So that was Clorox, Scott's Miracle-Gro, Kraft Heinz, Hershey, and Constellation Brands. We are looking forward to getting a bit more insight into the U.S. jobs market tonight with that non-farm payroll report. But here locally, we've got a day to go through, don't we? And we are expecting this market to retreat by about 13 points at the open. It'll be interesting to see if that holds. We'll be watching CBA. We'll also be watching some of those copper exposed stocks because we did see copper rising. Gold stocks were up, and we also saw oil. So we'll see what happens here, although wondering if people will want to take on a lot of risk ahead of the U.S. session when we have that jobs report. And we've also got this war of words ongoing between the U.S. president and his former friend, I guess, Elon Musk, warning that the tariffs will cause recession in the second half of the year. Talking about Donald Trump in the Epstein files. Have a nice day, he says. And also firing a shot across the bow when it comes to funding for the Republican midterms. Look at what's happened, though, to Tesla's share price and how it played out with all of these tit-for-tat tweets coming through, Truth Social versus X. I saw someone on the internet, quote unquote, just saying it's like watching a fallout between two kids in U.S. junior high. All right. Amazing where we find ourselves. As I said, there are adults in the room, hopefully somewhere. All right, the Open's coming up next.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.